So do I pay taxes if I put money from my personal account and put it into my business? Because that's seen as income. So that's a common question we get. A lot of times people are like, oh, I don't want to put money into my business because I don't want to pay tax on that. Now, you might think that that's silly and whatever, but it's actually very common that people don't know the difference. And what that happens when you take money from your personal bank account and you put money into the business bank account, you know, for startup costs to start the business, get it off the ground, that's called a contribution. And so let's say I take $10,000 and I put it into the business bank account, and then I start spending that on marketing and setup fees and software, things to get my business up and running, and those are all expensed out. So you put money in, you take expenses immediately. Now once you start generating revenue, now you've got income, and the revenue is offset by those income. And so until you hit above $10,000 in revenue, then you start you're profitable, you're making money. The key thing is to know that a contribution personal account to the business, it is not taxable. It is just like when you take it from personal. And then if you take it out, it is a distribution, like we talked about in another video. So contribution, distribution, it's very important to know those. You don't pay tax on them. Unless you're a C-Corp, you take a distribution out, a dividend, as it's called, and then you're paying tax if it's not on your basis. And that's a whole separate video that we could talk about.